Okay, good evening, everybody. Let's go ahead and get started. Want to welcome everybody here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's had a fantastic evening so far. It was awesome to see so many of you guys in that overnight trading webinar just a few moments ago. So we went almost to the very end there. So thanks for hanging out. It was a pretty good webinar. It will be uploaded in the next, 30 or 45 minutes. So you guys will be able to watch that after this webinar. And then of course, this webinar is also recorded, so you can come back and watch this one later. So, but thanks for hanging out with me tonight. That was pretty fun. I was really excited to share those results with you guys because it's been a pretty cool strategy. So it was really awesome to share. But before we get started, so tonight we're going to talk. We do a COT report webinar every week. I just want to make sure that we cover this. The COT report is integral in everything that we do with the scanner, with how we pick trades. And so I wanted to make sure that we cover this. I want to help you guys know how to use the scanner correctly to find your own trading opportunities. So that's what I wanted to cover. So we'll start from, what is the COT report, how we use it, how it implements into the scanner, and then lastly, how you and I can both find trading opportunities from the scanner, which of course most of it is derived from COT data. So before we get started, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you really lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's first talk about what the COT report is, because I know we have several people that have joined the program recently. Just this week, I think we've had like 10 new folks join the program. So I wanted to make sure that we kind of give a general rundown of what it is. And then, like I said, we'll get into the more technical side of how you can utilize this when you're taking a trade. So let's start here. So the CFTC, these guys are a financial regulatory authority in the United States, and they regulate the futures and commodities market. And one of the things that they also cover is Forex. Forex is a decentralized market, and so it's not on an exchange like futures and commodities are, but it still falls under the same umbrella. So it's kind of a different, Forex is kind of a different thing altogether, but that's what they cover. So obviously they're going to cover things like futures data, commodity data, and the Commitment of Traders report is perhaps the most important report that they release to the public every week. It's a weekly publication. And like I said, it's COT, or Commitment of Traders report. You can find it right here. It's free. It's not just exclusive to those in the United States. Anyone in the world can access this. So if you're watching this internationally, this is something you can access. And it's just data on US banks, which obviously are a big player in the global financial world. And they do represent a general population as to what the banks are doing. So if you come here, this is what the tab looks like when you jump into the Commitment of Traders report page. And there's a lot of stuff that you can look at. If you're here and you're new to the COT data, I would suggest you open each one of these plus buttons up right here. Just spend 15, 20 minutes reading each one of these, and you'll get a lot of really good information on for example, like right here, these are the types of different COT reports. We have what's called legacy COT data, supplemental, disaggregated, and we have these the TFF reports right here. So what does this do? The reason why this matters, if you're getting bored already, but this is why this is golden data. Like this is golden data right here, data that's made out of gold. So this is important because the banks are really good at trading. Okay, they're the ones who they're going to be trading in 10 years. They're going to be trading in 5 years. They're going to be trading 10 years. Whether you're trading or not, they're going to continue to trade. And the reason why they're going to continue to trade is because they're dang good at their job. And so they're really good at predicting the markets and knowing where the markets are going. They kind of decide which direction the market's going to go. You and I don't really decide which direction the market's going to go. None of us have enough money alone or collectively to move the market. So these guys are the big players. And so with this COT data, it comes out once a week in the different these different reports come out once a week on Friday at 4 p.m. Let's see, it's 4 p.m. Eastern, yeah. And it tells us what the banks have been buying or selling in the previous week. And why that's important is because I just, like we established earlier, they're really good at trading. And so if we can see what they're buying and selling, that matters to us. And that's why we built these scanners, is to take the data and make it displayable so that somebody like you or me could look at and use it as a tool to be able to figure out, okay, this is a direction I think I want to go, or these are trades that I think I want to take based off of what the banks are buying and selling. Okay. Okay. So when you come down, you can scroll through here. These are at the actual reports. So you have these reports on agriculture, petroleum, natural gas, electricity, metals. You have these reports on futures right here. And then you also have these legacy reports that come from different exchanges. The most common COT report that you'll ever find is the short format from the CME. So it's this one right here, and you can see it's from the Chicago Mercantile Exchange. And if you click on it, this is what a COT report looks like. And it's going to give you the most recent report. You'll notice that it's always going to be dated on a Tuesday. Okay, so the last one was on May 21st, 2024. Today is actually the 29th of May. So you might say, well, shouldn't there have been one yesterday on the 28th? Well, yeah, there is actually one coming out from the 28th. It will be dated the 28th, but we won't get access to it until Friday. Okay, so that's when it comes out. So the government, they do take their time, right? They do spend about 2 or 3 days putting this data together, and then you and I can take the data and decide what we want to do with it. The other thing you'll notice if you search through here, for example, if I do, I like to zoom in because it's actually kind of hard to read at just 100%. So I just do a Control Plus on my keyboard, and I can zoom in so it's easier to read. But if I do a Control F and I search for like the euro, I can find the euro here. Right here it says Euro FX, or for futures. So if I come here, you can see it says, yeah, Euro FX Chicago Mercantile Exchange. These are futures contracts as of the 21st of May, 2024. Now, the report is pretty boring, but again, like I said, it's very valuable information because when you come in here, you can see these are the long contracts and these are short contracts with the non-commercials, and then these are the long and short contracts for commercials. Now, what's the difference between these two? So long story short, to just make it simple, the non-commercial is your big banks and your commercial is your hedge funds that are, and these could also be multinational corporations that use Forex and futures trading for the purposes of operating their business. But they're not really speculators, okay? So we don't really want to follow the commercials because they're not speculating. They're using futures to operate their business. Non-commercial are speculators. These are the professional banks and speculators that are very good at what they do. This group is also known as the large specs. Makes sense, right? Because they're speculators. So we follow these guys most of the time. I have used commercial data for different things in the past, but I've kind of gone away from it and I've just really focused on the non-commercial side. Yeah, that's just kind of been my focus.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Okay, so what else did I want to share with you guys? Okay, so the other thing you'll notice is this is not like a Forex pair. Okay, so it just says euro. Why doesn't it say like euro dollar or euro yen or euro Aussie? The reason why is because, again, the CFTC, they monitor futures and they also monitor Forex, but they don't have data on Forex pairs because Forex pairs are decentralized and it's not something that gets traded on an exchange. So what we have to do is we have to take the data for the euro specifically and isolate it here on the COT report and put it into our journals. I've got several spreadsheets that I use for the scanner. And then we also have like the US dollar or the Australian dollar, and we take those and we isolate those futures contracts. We put them together and then we can do a series of derivatives and things like that that I've put together in my spreadsheets that help us figure out, okay, this is where the euro stands, this is where the Aussie stands, and then we just kind of from there make sense of that data. But we have to isolate individual currencies, and then from there we can work out the currency pair from there. So that's kind of my job. That's kind of what I've put together with the scanner, and I'd be more than happy to show you that part as well. But that I'm just trying to tell you that that's why I don't have like the euro against the dollar or the euro against the yen, just because that's not a function of the COT report. Okay, so now breaking this down even further, we come down here and you can see again, now that we don't need to worry about commercials, we'll just worry about non-commercials, which are the large speculators. And you can see longs. So this is how much they're buying and this is how much they're selling. So right now, as of this last report, these big banks in the United States have 182,000 contracts long on euro futures, and they have 141,000 contracts short on euro futures. So what that means is, generally speaking, the banks have been buying the euro overall because there are more euro contracts than shorts. Now, more importantly is not where they are, but where they're going, right? Where they're going next is the most important question, because where they are doesn't really matter as far as where the market's, are we going to go up or are we going to go down? What really matters is, are they switching long or are they switching short? So this is really helpful right here. You can see this. So this last week, there was an addition of 4,176 contracts long on the euro, and there was a subtraction of 20,144 short contracts. So we're getting rid of shorts from the banks and they're subsequently adding longs. That's important. That's an important detail, because if they're adding longs and getting rid of shorts, then we might want to consider that. To me, that's actually the most important information, even more so than the current snapshot, is the change. So this is just the change from the previous COT report that was dated on Tuesday, May 14th of 2024. Okay. So in 1 week, that's been the change by these big banks. Now, if you search something else, let's just do this real quick and we'll move on. Like if you search the Aussie, here's the Aussie. You've got 50,000 contracts long, 106,000 contracts short. Here's the change. So you've got a subtraction in shorts and an addition of longs. So the banks this last week we're adding longs and got rid of shorts. Okay, great. That's all awesome. Now, the next thing that we do is we actually take this a step further. So, we plug this in. We actually have our scanners here, right? So we have Steve's scanner and we have the COT scanner. I'm going to pull up both of these, right? And the bigger question that I like, and this is how I find trades. So for me, I don't actually care so much about the 1 week change, although that's important. I care more about what the market's done over like 2 or 3 weeks, maybe even 4 weeks. Okay, so the one I really focus on is the 3 week shift. Okay, so if on the COT scanner, this is one of the scanners that we have on the site. You can access this right here if you go to members and then you hover down and click on COT scanner. It's available right here. And you guys can look at this 24 hours a day. It's available and it will have the most recent COT report data right in front of you. This is a percentage. So when you see these numbers on here, like with the Aussie CAD here, it says, okay, 19.82% or 19.82. What does that mean? Well, that's a percentage. Okay. So this is the change. This is the net change in 1 week. So on the Aussie CAD, there's been a 19.82% positive shift in 1 week on the Aussie CAD. Over the last 2 weeks, there's been an 18.63% positive shift. Over 3 weeks, there's been a 34.26 positive shift. Okay, so what that means is the banks have been buying this, generally speaking, over the last 3 to 4, maybe 3 to 4 weeks. Okay, so they have been buying this, is what basically what we're seeing. And if you want to filter this by biggest shifts, you can do that. So you can filter this like here's the pound CAD. So the pound CAD has had a 39.18% positive shift over 3 weeks. So what that means is that this is the most bought up currency pair by the banks, these US banks, out of any other of the 28 currency pairs out there. This is the number one most bought currency. That's a big deal. That's a big statement to make, right? Because if we can say that with confidence, now we can go into that chart and look for buy opportunities, is the general idea. Okay. Now we do other things to kind of like when we look for price action trades, we don't just stop there. We definitely try to find liquidity zones, supply and demand areas that make sense. We don't want to just stop at, you know, we um, we don't want to just say, oh, the banks are buying, so we should bet our houses and, go all in on that trade. No, 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 no. We definitely want to take it a step further, but this is basically the beginning of that conversation. So when I'm looking for trades with you guys in the mornings, this is what I'm doing is I'm going to the scanners. I usually like to go to this one just because I can see visually every single week outlined and I can see where and when they put in most of their buys. Um, and and then I can kind of lay that out on the chart and figure out, okay, most of their buys were 2 weeks ago, or most of their buys were just a week ago, or whatever. And then we can kind of work it out from there. Okay, so that's hugely significant. So anything that has a really big shift, we're going to want to look at. So, if this were the beginning of the week and I saw the pound CAD at 39.18% positive over 3 weeks, that really matters to me. Now again, I don't think I covered this very well. Why do I focus so much on the 3 week shift? Like why the 3 week shift? Um, a lot of you guys know the answer to this, but I'll explain it. So the 3 week is important to me because the banks, what they do is they build out positions over several weeks. Okay. So they don't just build a position in 1 week and call it good. Sometimes they do, but usually these banks are so big that in order to fill a position to the volume that they require to make money, that it takes them 2, 3, or 4 weeks to get the position necessary to send the market in the direction they want to go. So that's why we use the 3 week shift because it's a good happy middle ground. Sometimes it only takes them 2 weeks to build the position. Sometimes it takes them up to 4 weeks or even 5 weeks sometimes to get the position they need. But 3 weeks usually seems to be a good starting place to look at. So if I see a big number high up on that 3 week shift, then I know that there's probably like if it's a positive number like this, then I know that that's probably a good pair to start looking for buys. Conversely, if you filter this, you can click on this and filter this the other way. If you click on that and you see all the negative numbers, you can see the CAD yen, for example, is the most negative number here. So the CAD yen is the most shorted currency pair out of any other currency pair in the market right now. No other currency pair is shorted over 3 weeks like that one is. So why would that matter? Well, again, if you can see that the banks have been selling generally over that period of time, then that would make sense for you and me to go in there and start to look for opportunities to short. So if I see a supply area where there could be a good chance of a move to the downside, really good chance I'll be selling at that area. Um, that's generally the conversation we'll have in the live trading calls, right? So, for example, this morning we actually took a trade, a buy limit order on the pound CAD. Why are we doing that? So again, this is the precedence, right? Is because the banks have been buying the pound CAD. Now, if I actually go over here to the chart, let's pull up the pound CAD itself. And let's let me clean up my charts here. 1 second, guys. I'll clean this up for you guys. Let me get back to a 1 hour time frame. And I'm going to turn this off. And I think I'll just leave the dark background for now. So you can see the banks have been buying this. Like this has definitely been going up over the last couple of weeks. I think 3 weeks ago would be somewhere over here, and this has been going up. So the banks are making money on this. But what did we look at this morning that got us excited about the pound CAD and the prospect of buying this? Several reasons, right? There were several motivations. One of them was, I think, Roger, you called this out this morning as you identified this pennant pattern, or was it Paul, or both of you? Both of you may have called this out, and maybe several others called it out too. So I apologize if I didn't say your name out. But yeah, a lot of you called this out this morning. This is a bullish pattern. So we have the banks blessing, right? Like we know that that's what they're doing. They're buying this, right? And all of a sudden the technicals are lining up. So one of the problems I had several years ago, like 7 or 8 years ago, um, maybe 9 years ago now, it's been a while. No, maybe 9 or 10. It could be that long ago because I started trading about 12 years ago. So yeah, it probably was like 9 years ago, 10 years ago. I discovered chart patterns like a decade ago. And I was like, oh, this is like the coolest thing. I loved learning about the pennants, the head and shoulders. I learned about double tops and double bottoms, triple tops, and so on. And I just got so crazy. Like I had any chart I could find with the pattern, I would just throw a trade on there. And I just got super, super excited just to go in there and throw a trade on. And I missed a big lesson. Well, I learned that lesson later, but the big lesson is you don't want to just put a trade onto a chart just because there's a pattern. Patterns can be misleading. Sometimes you might look at the market differently than how I would look at it. So patterns should be like a secondary source of confirmation or information in your analysis. To me, a primary source of information should be the COT data because it's more objective. It's an objective component of data. It's not something that's half true. It is a fact. Like the banks did buy. They are buying something or they're selling something, right? And so that to me, that should be a primary source of data. And then after that, if you can find confirmation to continue to buy something, then great. Sometimes we'll actually get a primary source of data from the COT report and we'll find a currency pair that we like because the data says so, but then we hop on the charts and there's really not a lot of confirmation, right? I'll give you an example. So this one I'm actually pretty excited about. Like I'm looking forward to this one taking off here pretty soon. Potentially, we were thinking that it might actually break down first into this demand zone and then rally to the upside. That's kind of what I'm hoping for on the pound CAD is a move down to this demand and then we'll get a subsequent move up. It's possible that this just goes straight up, which that if that happens, then good analysis, but we would miss out on the trade. So that definitely could happen. And we talked about that as a risk. Like if you think you might just miss out on the trade, you could just buy now but just be aware that it is possible that this dips down to here first into demand before it goes up. But I look at this and I think, well, if the banks are buying and this is the demand zone down here, then there's a good chance I'll get their help down in this area. Okay, that's kind of how I look at it. Let me show you guys. There's a currency pair that there's a couple of currency pairs right now that are looking good from the COT scanner, but they don't look as good on the as a price action trade goes, right? So this is why you got to do both. You have to have COT data telling you one thing, and then you need to have the technicals and you got to you got to know your way around certain principles, which is why I teach that in the calls every morning. You got to know the different patterns. We don't talk about too many. It's just like a handful of patterns. You got to know how to draw a trend line correctly. You can't just draw lines on the chart. You got to know what a trend line actually is, right? That's easy. That's just a quick lesson. We also have several videos you can watch on that. And then you got just other price action principles like learning what an engulfing candlestick looks like, and you're looking for shooting stars, and you're looking for hanging man candles and dojis, right? But once you kind of know a lot of that, and you kind of get some practice, then it's a lot easier to find those trading opportunities. Okay. All right. So let me show you one. I think it's the NZD. Let's see. Yeah, like for example, the NZD franc is one right now that's been bought up. Not a ton over the last 3 weeks. It had a really big shift this last week. But when you go look at the chart, I don't think it's quite lining up right now. Like, let's go look at a few of these. Um, yeah, so like right here, this is one that the banks have bought this last week. Okay, pretty aggressively in a decent amount over the last 3 weeks, but most of that buying came in just the last week. But one thing that's a little concerning when I look at this NZD franc, and this isn't necessarily a deal breaker, but it is something to look at, is right now we have this little trend right here, and it broke. Like you have a broken trend right there, definitely. And I think you can even, there's actually, let's see, can you draw this out? Like, does this count? No, I don't want to draw that one out. I don't think that counts as a trend. You need 3 points of engagement to have a trend line, right? So we definitely have 3 points right here. Um, I think you could make that work. I think the trend, let's see, are those wicks or are those full candles? Okay, so this is a full candle right here, but this is a wick right there. So there's your trend line, right? So this trend line broke right here. And so I saw this today and I'm not feeling as good about it. And it actually looks like it may come up and form a shoulder here and then go down. So you got your shoulder, you got your head, and then a potential shoulder formation right there. And then the market will likely pull back and go down from there. So I'm not feeling super good about that, even though the banks have been buying a little bit. So it's not something, I don't use this COT data to just basically just be like, okay, I'm going to throw my trades out there. We do a little bit of something. We have this weekly strategy where we take these weekly trades at market on Sunday. And that is a simplistic way of using COT data because you're not waiting for any type of confirmation. You're just saying, hey, this is kind of where the data is right now. So we're just going to take these trades. And it works. Like it definitely works. It's a very slow and steady approach. It's not going to make you rich very fast, but it does work. So if you're just looking for something that does work, you can take those weekly trades. It's a very simplified way to trade the markets. But if you want to learn price action and you want to trade and you want to learn the charts themselves, this is what this is for. So you want to take the COT data and combine it with what you understand on the charts themselves, right? Okay, so this is an example of a trade that the COT data is pushing one way, but the data would say another, or not, the data says one thing, but the technicals would probably tell you to sell this instead. Okay. So you're not always going to have a perfect, like the data is not always going to be this perfect, you're not going to line up perfectly. Whereas that pound CAD looks like it could be a pretty good trade coming soon. It could definitely break up any moment. I could see this, even tonight just breaking up right away up into this supply area. If that happens, like I said, okay, great. I'll probably cancel the limit order, but I still have my hunch that the market's going to come and attack this first, and then we'll get our move to the upside. So that's what I'm kind of waiting out for is is um is that right there. Okay. Any questions about this, about the COT data in general, about what we're doing? This is more of a style that I like because for me, I like to go out and hunt things, right? Like I really like to go out and take the data and make it into a narrative or to a story that makes sense with the charts, right? That is a skill that takes time. You're going to have to come to the classes. You're going to have to play around with the charts. You're going to have to see different things. You have to take trades and see what a losing trade looks like, see what winning trades look like, right? That is going to take some time to get that skill down. But in my opinion, it's one of the most lucrative things you can do because now you have something that most retail traders don't have. Because a lot of retail traders, what they do is they just go out and find a pattern. This is what I did 10 years ago. They find the pattern and then they would just trade the pattern, no other confirmation. But imagine if you could take your patterns and the data and marry them together. That seems like a much more proficient way to trade the markets, right? So, okay. Anyway, and that's what we have going on. I haven't checked it this evening, but we have this USD CAD trade that's doing great things for us right now. This was the same thing. We'll wrap up on this unless there's other questions, but this USD CAD trade, we bought this because if you go to the COT data, this has been bought up. Yeah, right here. Look at this. So this last week, you had a positive shift. Okay. Over 2 weeks, an even more positive shift. Over 3 weeks, an even more positive shift. So you've got a really solid and healthy 3 week shift in COT data. It kind of falls off between week 3 and week 4, but that's okay because the shift is over 3 weeks. That's the campaign. These banks go on these like 2, 3 week long raids and they've been building this position. So now what we did is we came in here, found confirmation. We found a rising pennant pattern. We found a break of structure right here. The market pulled back into demand right over here. We formed a reverse head and shoulders pattern. This was earlier this week on Monday. And then we found a great breakout opportunity. We said, hey, this currency pair is exhibiting bullish price action. We have the banks buying this. Let's get in on a breakout, right? Like you're just kind of putting two and two together, right? That's kind of what you're doing, right? And those to me, those are the very best trades you can take because like I said, you're combining the two. Right. All right, guys. I don't really have anything else to cover. I just wanted to recap that. And I think we're good to go. So we'll end this one a little shorter because we spent a whole hour in the previous call and then over 30 minutes in this one. So, all right. Appreciate each one of you. Have a fantastic rest of your evening. Thank you for coming, and we'll see you guys in the next webinar.